Hey, hi everyone. Welcome to another video in our Nifty backtesting series. So today we are going to discuss about long calendar with calls strategy. So this strategy is again a directional strategy. So we have been discussing about range bound strategies, and we started our discussion with the directional strategies. We covered both the bullish as well as the bearish directional strategies like bull call spread, bull put spread, bear call spread, and bear put spread. And we also covered range bound strategies like short strangle straddle and hedged versions of them like short iron corner and short iron fly. So this is a long calendar with calls. So long calendar with calls is another directional strategy, and a calendar with calls will help you during the bullish direction. Okay, so let's do the back testing. In this long calendar with calls, what you do is uh, add the money of the current week. Basically, you will short, and the next month, basically, what you'll do is at the same strike, you will buy that. Okay, and that is what is the strategy. And since we are using calls here to for a long position, this is called as long calendar with the calls. Okay, so that's what the strategy is, and it is a bullish directional strategy. And so let's take the example of April 28th, where market was slightly bullish on this particular day. So if you see, the initial deployment cost for this strategy is 82,574, and risk to reward is 2.3 is to 1, and pop is 53.54. Max profit is 10,714, and max loss is 24,929. So the capital deployed is a little higher than the bear or bull call spreads, and but less than the even a short iron corner or iron fly, and very less compared to short strangle and straddle. Okay, so I've deployed this and I've tested this at the end of the day. So this is the results. So it gave a 5.25% return on the capital deployed on that particular day, because it was slightly bullish on that day. So you make money if the market basically goes is bullish, so it moves in this direction, you make money in. So that's what this strategy is. Okay, and so next is April 17th, which is extremely bullish day. This is the expiry day, and then was a gamma blast in the second half of the expiry. And on expiry day, the capital deployed is high. Now they have increased the margin for calendars during expiry, so it is high on the expiry day. So 2.39 lakhs, and pop is 45%. 1.4 is to 1 is the risk reward. 8,615 is profit max, and 12,000 is the max loss. And here too, if you see, we are shorting the at the money current week, and then we are buying the same strike for the next month. Okay, and backtesting results, when we did it, it gave 488 rupees, which is 0.2% on that particular day. Okay, so yeah, so this is let's test this in the stock mock tool, April 28th and April 17th. Okay, so April 28th and April 17th. Okay, so this is April 28th. So let's go to April 28th. So April 28th, let's go to 921, and bullish we go. And this, let's select a long calendar with calls. Okay, this is a long calendar with calls. So you see, break even is okay. Login. Yeah, so break even is so 24,008 and 24,667. Okay. And yeah, so that's what is the break even. And yeah, let's test this strategy now. Every half an hour till end of day. You see, it was slightly bullish day, so it started making profit from the beginning. And yeah, as long as it stays within this range, you're gonna make money. Okay, but unlike a short straddle where your loss is high, here your loss is also limited here, 24,525, which which is the loss you'll make at this stage, which is more than two sigma. So yeah, so that's what. So we have got 5% returns on April 28th. So let's test this on April 17th also, which is an expiry day. So yeah, so this requires more capital on expiry day because that's a new rule by SEBI. Basically, on expiry day, the calendars now require more margin, and yeah, so that's what this strategy is. We are basically trading in call options. We're selling the call in the current week, and we're buying the same strike call in the next month, basically. So 17th April, this is 30th April. Next month, or it depends if you want to buy next month, or 1 week or 2 weeks, or the end of the month also, it depends. Generally, the end of the month one is taken. The logic here is, if it stays within this range, what happens is this will have a theta decay, which is faster compared to this one. So because this is, end of the month call option, the decay here will be very less, and the decay here will be fast because it is the current week's one. In case the market moves, okay, the market moves, the movement here will be very fast. Okay, so you'll make money good here, and yeah, you'll lose less here. So that's the basic logic in this long calendar with the calls. And here we are taking a directional strategy. So we are assuming that the market is going to be bullish and take this strategy. And you need to have a direction before you deploy these directional strategies, a view before you deploy these strategies. So let's start the testing, and yeah, so it started giving good amount of money. Yeah, in the initial hours. Okay, so initially it started giving very good amount of money, then again it's increased to 1.3%. Okay, to 1%. So see, it's going here. Now it has crossed. Okay, so it has crossed, and it has ended just at the, yeah. So even though it's 0.2% at the end of the day, but ideally on expiry day you need to just leave at 129, or yeah, this is the ideal time, or probably here, this is the ideal time to leave. Okay, so you could make good profits if you leave at this stage. Okay, so that's the long calendar with calls, guys. I just wanted to cover this one also as a part of our backtesting series. Thanks everyone for joining the call. Have a nice day. Bye.